Hello fellow traders, on this video I'm gonna show you how to draw trend lines mechanically and methodically. Let me start. There should be no subjectivity drawing trend lines. There are many different ways out there to draw trend lines, far too many I would say, and they're all probably good for those who have mastered those methodologies. However, if you ask any trader to draw a trend line, I'm sure each of them will do it in a different way. And we just can't do that. I mean, we have to have a methodical and a very objective way of drawing or a trend line or drawing our zones, taking a trade. We just can't lean on subjectivity. Okay, we can't lean on subjectivity in our trading plan, because it's all about capital preservation. We just can't depend on that. Okay, how to draw a trend line? It's very easy. Well, not that easy because there are many problems. Many traders have problems doing that, but let me explain to you in a very methodical way. We must connect the latest two obvious valleys, swing lows and peaks, swing highs. These valleys and peaks must be clear and obvious. There are videos explaining that, and if they are not, consider them as pauses. If they are not clear, basing should be unclear and poor in its structure, and removal could be expected anyway. So don't lean on those, on unclear ones. Update the trail line every time there is a new valley or peak, and each time frame has its own trail line independent from other time frames. We need to do a top analysis of at least 3 time frames in our sequence. Okay, continuation patterns CPs will not be used to connect trail lines unless there are 3 or more, and that is overextension, which will be dealt with in another video and lesson. So we're gonna look at some examples, but let me explain to you how to draw a bullish trend line. We must be methodical and mechanical. Okay, when drawing a bullish trend line, we should not start at the top of the bottom or the bottom of the chart, or even in the middle of the chart, as I see many people doing. We have to be methodical, do always the same thing. So how do I draw a bullish trend line? We must locate current price and the highest high closest to current price. Okay, move down and left and locate the latest clear valley. So that will be our first valley. Continue to move down and stop when you see another valley to the left, lower than the previous valley. Okay, and left. Connect the two valleys with a bullish trend line, and then you must keep on updating the trend line every time there is a new valley whose second leg out makes a higher high than the upper valleys, the first one in the valleys, upper valleys second leg high. Okay, the same applies for a bearish trend line. We must move instead now up and left. Okay, we move up and left, and locate a peak there. Okay, and we continue to do the same. We're gonna look at some examples here. I have these pair loaded from my previous video, so I'm gonna use this one. Okay, so for a bearish trend line, let me use the scale function. For a bearish trend line, this is what we must do. Bearish trend line, since it is a bearish trend line, we must start always at the bottom of the chart. We locate current price and we go down and left and locate, okay, we go here for a bearish trend line, we go up and left, okay, up and left, and we stop at the pause or peak. We are looking for peak, so we must consider if we must ask the chart if this here is a peak or a pause. It is clearly a peak, so it is a rally and a drop. So that is our first peak. Okay, then once we have that peak located, we have to keep on moving up and left and stop at another area, another peak, potential peak. Is that a peak? It is a peak because it is a rally based drop which made a lower low here, and then rally drop which made a lower low than the first peak's second leg low. So we should be connecting this trend line. The break of the trend line potentially creates bullish demand area if we consolidate away, and this could happen in 2-3 days. Okay, this is today is the 29th of May, so it's just 2 days left for the end of the month. Okay, so this is a while long. If we wanted, so this is the latest valid bearish trend line. If we wanted to draw the previous one, then we would have to connect the latest two. This couldn't be. Okay, this would be the latest one. We go up and left and we stop. Is this a pause or a peak? It is a peak, a pause. So we don't use it. Remember, we do not use CPs to connect trend lines because they are continuation patterns. They do not create trends. Okay, so we must continue to move higher and locate another pattern. Is that a peak or a pause? Is it a peak? So this is our second, okay, second peak. This is the first one. This is the second one. If this price action did not exist, okay, and this was a lower low, we could connect this trend line like that. Okay, but this trend line wouldn't be valid because it didn't make a lower low there. Okay, it didn't. So we couldn't make a lower low. But if it made a lower low, then the second leg out low, then we would connect it like that. However, rules do not allow that because we want a lower low than the previous peak. Okay, that will be the last trend line, very short line, valid. For the bullish trend line, we need to locate current price and go to the highest high, which is here to the left, and that is that one. Okay, this one. So we go down left. This is a fairly easy candle. We have one valley here. So there is not another valley here on the left. We can continue here. Must continue here, and we locate another valley. So could we draw that trend line? Okay, no, we couldn't. Why? Because the highest high made by all this rally is right there, and this valley didn't make a high, so we just can't do that. Okay, we can't do that. So we have to continue drawing trend lines because we see that the price actions doing like that are not doing like this. It's not creating new valleys. So let's try and draw the previous bearish trend line until we see a valid bullish trend line. So we have bearish trend line. We start at the bottom. Okay, we go up and left. Is this a peak? Yes, it is. It is a rally-based drop. So this is our first peak. So we continue to move up and left. And is this a peak? Rally, drop. It is. So this is our second peak. We could draw that trend line. That trend line would create that area supply, and this one created this one. Okay. If we continue to move higher, up and left, is this a peak? Yes, it is. So we could connect previously. If this price action didn't exist, we could connect this trend line like that. And that would be valid because the low of the first peak is this. And right there, we made a lower low than the first peak's second leg. Whereas here, okay, here and there, this low wasn't made there, it was made there. So we should connect these two. So this is the latest bearish trend line previous to this one. Okay, so now we go here for a bullish trend line. It looks like there are some peaks, valleys here, sorry, on the bottom. So in order to draw the trend line, we just don't do this, like from here to here, at the bottom. We always start for a bearish trend line at the bottom and for a bullish trend line at the top. We locate the latest one and then we go work our way down to the left. So is this a valley? We move down and left. Is this a valley? Yes, this one is a clear valley. This is unclear. Okay, that one is a clear valley. Yes, it is. So this is our first one. So we move left and we found a pause, rally base rally. This is not. We don't use CPs for connecting valleys or peaks. Then we continue to move down and left, and we stop at another pattern here. And this is a clear drop rally. So we have our second here, first and second. Therefore, we should be connecting these two valleys. The break of a trend line creates supply. Okay, potential area of supply. And that's it. If we were to continue to draw the previous trend line, okay, this we've got a valley down there and all that, we could continue like that over and over and over again. Okay, this is what we have on this. This is how we draw. Remember, in order to draw a bearish trend line, we must start at the lowest low, current price, lowest low, then move our way up and left and locate first valley, then up and left, and second valley. The second peak must make a lower low than the first peak's second leg low. Always. Same here. First peak, move up and left. Second peak, move up and left. First peak, second leg low. Second peak, second leg low, lower than the first peak's second leg low. Inversely, or conversely, for a bullish trend line, we must have two valleys. We start always at the highest high, current price, okay? Because here we have nothing. So highest high at the top. If we are interested in locating a valley here, a trend line there, then we must start at the highest high. So we go work or all the way down to a clear valley there, down the left, continue down the left, and we get the second one. And that's it. Do not do this. Something like there, 1 and 2, because you will be missing that one. Don't do this, because you are missing that one. So if you ask anyone to draw a trend line, you will have so many different trend lines, so many of them. So we are interested in locating the latest two impulses, valleys or peaks, because once they break, new potential areas of supply are and demand are created. The market's dynamics are changing on that time frame, and we are not allowed to take that short or longs at those areas. We need to lean on a higher time frame than the one where when we see the trend line break. If we we drew this trend line like that, then we wouldn't see this as supply. And look what happened there. And this happens over and over and over. So these trend lines that I just drew there will probably be, let me draw another color, like, I don't know, this orange, red. These probably will be a valid trend line as well, but not on this time frame. Each time frame has its own price action and dynamics, and we should connect the latest two values or peaks on any given time frame, independent from the other time frames above or below that time frame that we are analyzing. Okay, so that if we switch to a monthly chart, as you can see, this is connecting two valleys, and probably on the 3 months chart, no, it doesn't. Okay, so this trend line belongs to a higher time frame, not to that time frame. As you can see on the red trend lines, those trend lines are not valid on the monthly chart, but they are valid on the weekly chart. Okay, there we've got two peaks. So here, if we move this red trend line here, this is the trend line on the monthly chart. Okay, but if we switch to the weekly chart, if you ask somebody to draw a trend line, they probably will draw it like that. Okay, because you see this obvious drop in price and then this second one, and they draw it like that. Okay, it is correct as well. It is correct as well, but not for this time frame. Okay, for that time frame. So here, as you can see, if we want to draw a bearish trend line on the weekly and we start from there, we've got a problem because our eyes will be attracted to that area, okay, like a mosquito to the light. So we'll be attracted to that area and to that area and probably to that area. So you will have people drawing lines like that, probably. Okay, many different ways, or like that probably. But maybe they will have their methodologies. I don't know. I don't really care. Okay, but if we look at all these trend lines, they do have nothing to do with ours. So how So how do you locate changes here? So you see these big impulse there? Why does that happen? Why? If price is dropping, impulse down, retracement, correction, impulse down, correction, impulse down, correction, impulse down, and then now an impulse bigger than the previous impulse. Come on, there's something wrong here. But if you draw trend lines like that, then you will never know if price action is changing or not. You must have other strategies, maybe indicators telling you that price is oversold here. I don't need any indicator to tell me this is oversold. It is oversold after all this. Okay? So we must lean on the latest impulses in order to connect the trend line, the latest two peaks or valleys, clear ones. Because the break of them, if we have stronger impulses than the previous impulses, there is something wrong. Houston, we've got a problem there. So in order to draw a bearish trend line, we look at the lowest low. Always, not from the highest high, and the lowest low for a bearish trend line. And we work all our way back to the top. We stop when we see a pattern, and these patterns are usually the bearish engulfing pattern, prism patterns or dark cloud cover, evening star, and Marubozu, and all that. Okay, and Haramis, 4 or 5 patterns. Here, it's an obvious peak. Okay, basin there is very poor with spec removal. So we've got our first one here, first peak. Now we continue to move higher, CP. Nothing, 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 nothing. We stop. This is a drop base drop. This is not possible. And there we are. Rally drop. So we've got the second one there. So we connect this one with this one. Not this one with this one. This is the third. This is the fourth. This is the fifth. This is the sixth. Okay? We do not connect the sixth with the second. Or the fifth with the second. No way, my friend. We must connect the latest two. When we connect the latest two, okay, then we get this. Like that. And new area of demand created. If you wait for any of these trend lines to be broken in order to give you a sort of signal that something is changing, you will be too late. Okay, too late. This is a monthly, weekly while on, probably in a monthly area of demand as well, and price is starting to move higher. Weekly out of alignment counter trend is possible if price action to the left is poor. Okay, as explained in the rules. So remember, we must always connect the latest two valleys and peaks because we want to connect the latest impulses. If a new impulse is stronger than a previous impulse in a bearish market, then we've got a problem. We want, in a downtrend, we want impulses down, and in an uptrend, we want impulses up. If in a downtrend we start having impulses down and suddenly we have a strong impulse up, first one, only one, that is stronger than the first impulse down, we've got a problem. But if we connect a not too steep trend line like that, you will never know why is this changing. Why is this changing? And that's the logic behind it. Okay? So bear that in mind, my friend. Okay, and that's everything. This is how to draw trend lines mechanically and methodically connecting the latest two impulses. Have a great day. Bye bye.